The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat trade found some good support to the upside on Monday. Double-digit gains there. Was that reaction to the weekend news from the Biden administration allowing the use of missiles by Ukraine deeper into Russia? Seems like maybe we added some war premium back, and that spilled over into corn and soybeans as well. Some double-digit gains in the bean market to kick off the week on Monday. Decent strength in proteins. Crude oil up another 2%. Gold surging higher as well. So mostly a lot of green on the screen. Let's talk about it. Joining us for our market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you again this week. And I kind of indicated a mostly green light go type of trade on Monday. Let's start with your overall perception in the grains and oil seeds. It felt like good news in the wheat kind of spilled to the row crops, at least on the surface, John.
I think that was a big factor there, the strength that we saw in that wheat market basically from the start of the day. Throw in there, too, the U.S. dollar index finally looks like it's hit a peak here, at least in the near term. So we'll see where things go, but we got a nice little reversal off that dollar last week, seeing some weaker trade there. Maybe that's just triggering some money flow into the commodity sector. I think the market was a little surprised by the length that the funds got into corn very quickly in a very quick order here also. So maybe there's just some buying going on in that regard. Obviously today, the big story in terms of the markets was the wheat market most of the day, kind of tied to, I believe, what you stated there with the geopolitical events over the weekend. You saw Russia put a massive troops, 50,000 troops on the border of Kursk with the possibility of maybe trying to retake that area. And I think that's what triggered Mr. President Biden to come through with the announcement regarding the use of those longer range missiles. So again, we kind of got Ukraine dancing on the edge of a knife here in terms of the news front. And that just helped fire up that quick buying spree, short covered rally, whatever you want to call it, into that wheat market, just in case things do really escalate again in terms of tensions.
I know as well, on top of that, some more export news. Not only did we get export inspections on Monday, but we saw soybean oil to India, soybeans to Mexico, and soybean cake and meal to the Philippines. So again, continuing some of that export news just to act as a support underneath these grain and oilseed markets, John.
Yeah, that helps out that bean market again a little bit there. Just continue to see some form of movement of product. The soybean oil to India, now that's our second fairly good sized purchase there. So that could be maybe a little bit bigger story that we need to keep an eye on. With that, though, today, really, soybean oil didn't perform very well, did finally close a little bit higher at the end of the day, but struggled in red territory most of the day today. So maybe that purchase was what we saw already come through the pipeline on Friday when we had that really good day in oil. So we'll have to see how the market handles that. Soybean meal, it's a competitive battle between the United States in terms of supplies and this upcoming Argentina crop that they're getting planted right now. If things hold true, Argentina will have a very comfortable supply of soybean meal later this year. But, right at this window now, we're still probably the best game in town in terms of those soybean meal supplies. So it's good to see some business coming our way, and also same thing still on the soybean side, with the stronger dollar, it has kind of hurt our competitiveness overall. So, but it was still good to at least see Mexico step into the market, pick up some soybeans to go with them, all that corn they've been purchasing. Again, still cautious how long those sales are going to continue. The general trend has been a little bit slower on the soybean side of it. Last week's export sales numbers for both corn and soybeans were good, but on a decline and towards the bottom end of trading ranges. So maybe that soybean window is kind of already closing. That is something the market will be watching extremely closely here going forward.
Couple thoughts on that soy side as well. I know we got the NOPA crush numbers Friday, all-time record there. Also, China announcing it's going to cut or cancel export tax rebates for a number of products, including soy oil. Just wondering your reaction to some of those notes and if those could be longer-term supportive factors in the soy complex, John.
They can also with the soybean oil side of it. It might be just a reshuffling of deck chairs. I mean, that was some of the positive energy we did see on Friday as well. Was the talk of that coming out in terms of that soybean oil market. Now the chatter today was, and as we saw in the marketplace in general, Chinese soybean oil on the Dalian exchange kind of took a punch in the gut today because of that news, because of the backup of those fossil use cooking oil supplies. So again, it just kind of reshuffles those deck chairs a little bit. Now we've got good crush, we've got good demand on that side of it. That's encouraging to see. We're probably going to see record crush throughout the majority of the year, so we'll have to watch how the soybean oil stocks go. We did see a little bit of a tick up in those month over month on the last crush report, so that'll still be a big factor. A lot of it's still going to be really focused on too what's going to be the policies going forward now with the administration change in terms of the biodiesel side or the green fuels or renewable fuel side of things overall. That's something the market will be watching very, very closely, and how those programs are supported. If that support fades again, that could be something that could be very limiting to the marketplace.
Some notes that have come out as well on Monday, just interesting. Reuters reporting China and Brazil set to announce agreements in agriculture on Wednesday. An update there, it says it could include livestock, beef and pork offals. So you wonder about that. And I would say I'll classify that under that's nothing new, I guess. I mean, we just might get some confirmation, but one has to wonder a headline like that, if it could have its share of impact on the markets as we go through midweek. John, what do you think?
We'll have to see when things come out. But again, obviously, we're not. We're seeing China as a major purchaser of those goods already. Anyway, they could be very ceremonial, just like when they come to the United States and they'll lock in a bunch of beans and with the Iowa producers, and they've done that in the past where it's we already knew they were going to sell those beans there, but we just kind of got the commitment put together. That's one thing we still got to continue to watch as we go forward beyond this year and the years ahead. President Xi from China was in Peru helping, christen a new port that they're building there that China's put, I believe, 1.3 billion, I think was the number I saw over the weekend, into help building this deep sea port and now rail system from central Brazil into Peru that's going to get those bushels to the coastline. By going out of Peru, it saves quite a bit of time in terms of the transport pace and as well as money. So again, just their investment in South America as well as other locations throughout the world just to open up more ports, more trade for them, still kind of makes you nervous of the longer term picture here, because we've really kind of slipped down on their burner in terms of the interest in U.S. supplies. And if they can continue to tap in those other markets, as long as crops are there, weather's good, the U.S. is going to be the second player in terms of all those trades, and we're seeing that already happening with corn and soybeans and this last year.
Looking at corn and beans, basis levels looked like some slight improvements there last week. And in the case of corn, I know D's futures were above the 50 and 100-day moving averages as well to close out the week. So, I mean, you look at cash basis and over in that corn market, any big notes for you there that you're watching this week, John?
There continues to be some friendly news that I do like in the corn market in this window, built by that demand base that we do have out there for both ethanol as well as the export side. The only thing that's still concerning to me going forward is where the producers are at in terms of their bushels. We've seen this fund position grow into 100,000 plus long contracts, and prices really haven't done a whole lot during that time window. And it's just because on the flip side of them buying the market, commercials as well as producers are making sales into that, and it just limits the price movement. To me, it makes things a little bit scary, because if they get some news that they want to rip this thing back over, we haven't seen much of a rally, and now they got the energy to, and the momentum to possibly push this thing back again. We'll have to see how things turn out. We'll probably be fairly choppy into the end of the year, but we'll see what 2025 has in store. If I remember correctly, looking at charts this week and over the weekend, last year, the first two trading days saw pretty significant sell-off in both soybeans and corn as we moved into 2024. Kind of makes you wonder if 2025 could set itself up the exact same way. But again, those things are out there, and there is some, like I said, friendliness, and at least in terms of the cash market in some areas. Producers are still having a hard time making sales at these levels and even touching profitability. So they're going to be a little more tight-fisted with the grain, especially maybe into the end of the year. So we'll have to just see how this market kind of plays out. One thing also this week we're going to be really keeping an eye on, obviously, it's options expiration for December options. So that'll come into play for both, for all grains. We do have December soybean options based off the January contract, but not to the level that we have those regular months. But that could give us a little bit of volatility. There was a lot of open calls all the way down to $4 in December corn that I was tracking last week. We've already shaved some of them off with the move from 430 to 420 before today. And we'll have to see where that goes. And then right after that, the next Friday is first notice day. So those basis contracts, any grain that needs to be priced or decision made on, probably will need to be done before Thanksgiving, the 26th, 27th. I know last year we had a fairly quick sell-off right into that 26th window, and the 27th. We had ourselves a nice little rally going into the middle of December before we just flattened out into the end of the year.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's go over to the proteins. Cattle and hogs had a decent up day in futures on Monday. Felt like we kind of followed through some of the support, at least in cattle, from Friday. Looking at feeders, some triple-digit gains there. Live cattle showing some decent strength. Your thoughts? Let's start with cattle trade. I mean, are we finding another uptrend here possibly? What are you watching? I know cash trade, for instance, last week was $2 to $3 lower. So any thoughts? What's going on in cattle right now, John?
Yeah, the feeder cattle market turned into a leader starting on Friday last week with that big run higher, and a couple things maybe coming into play there. First off, we are consolidating. So we broke out of that consolidation pattern to the upside. So we saw that technical buying come into the market in that regard. On top of that as well, we do have the November contract coming off this week, and the feeder cattle market was trading fairly soft compared to the index. So maybe we just got some squaring up to get those contracts and the index in line. I think that's some of the bid that we're really seeing in terms of at least the November and some of those front end futures. Even today, January is still trading $3 under the index with today's move in the index. So we'll have to see how it goes. Good follow through on that feeder cattle market today. Again, still just talking to people. The feeder cattle market has stayed strong in terms of price, which, when the feeders move, that can lift live cattle. You saw that movement into the second half of the year in terms of prices, in terms of live cattle. Now, front end live cattle still a little bit questionable on the charts given the time of year. Now we're into maybe some beef rib demand. We had a good jump in retail carcasses today. We'll see what cash trade does this week, as the trend has been softer there. So kind of got some mixed messages right now, at least in terms of these markets. But I'll tell you, if these fundamentals kind of pull back around again, at least in terms of the cash market, the retail values, because we know the fundamentals in terms of cattle available out there is still very, very friendly.
Well, and I wondered too, as we get into this holiday time frame, do we see things slow down, for instance, in feedlot country and more? What does that domestic retail demand look like for beef, pork, et cetera, turkey? I would have to think a lot of the Thanksgiving needs are already priced in, but we still got Christmas and New Year's in front of us too to watch out for here, John.
Yeah, that's a window we see some good movement in the beef rib trade. And, last week's carcasses closed at 303, so that was pretty significantly off the most recent high. So there may be some value buying in this window as with the jump in the retail values today at midday, as we're looking towards that beef rib trade over the Christmas and New Year's holidays. So, again, that'll be a trend we need to watch going into the end of the year, and then we'll see where we go in 2025.
How about that pork side? Are we kind of getting to the point here where we pulled back last week? Are we finding a bottom maybe, kind of getting into a range now after we got what felt like to be very overbought in hogs? What do you think, John?
We had a pretty good correction then the week last week, sideways trade consolidation today, but then you go look at commitment of traders and, there are 120,000 plus long contracts. Now that was on Tuesday, so they've taken some air out of that already by the time we get to tomorrow's reporting of commitment of traders. So we'll still see if the money wants to push that now. Supportive wise, the cash index was trending higher, softer today. So we got to watch what's going on in terms of those fundamentals, what's going on with the retail values. Saw a little bit of strength at the end of the week, but still trading under the $100 level. So to me, the hog market looks a little bit concerning right now, but we did kind of hit our first point of a technical correction, and now we're consolidating there. So Again, the money flow is going to be the biggest thing, I think, in both these, as well as cattle. We talk about the fund money positioning. They're up over 90,000 long cattle contracts in the live cattle side as well, which is one of their longest positions in a while, actually matching the high for the year in this window. So the money flow might be the trigger that we have to watch, maybe more than the fundamentals here, especially if they decide to take some gains off the table. Either furthermore as we go into the end of the year.
Well, the dairy market trade, John, any big notes for us there this week?
No, finally getting some recovery. Nice strong movement this afternoon. Again, cheese trade higher for the second day in a row. Probably a signal of that holiday trade coming at us here. We're, like I said, probably through the Thanksgiving window, but we're looking at the cheese trade for Christmas and the New Year's holiday. So we got at least some upward movement in terms of cheese prices. That seemed to put a bottom into this market, at least last week. Good follow through today. Now we'll see how far this rally wants to go. I still think it stays a little bit limited. And we get milk production report on Thursday this week, so we'll have to see how that comes out as we've been watching, supplies in terms of production on the increase here. And like I said, after we get through the holiday window, then does that cheese demand stay strong, or do we go back to the softer side? So this little bounce here may be an opportunity for producers. If you missed an opportunity to get something put together, here comes a window again that might have some value for you to at least get some more hedging in or get some more milks on the book.
John, anything final you would throw our way here this week as we close out the show?
The next 6 weeks till we get to the end of the year could just have a lot of choppiness in it. It's really hard to gauge. You got a positive and negative. You got too much supply in grains. We got a good demand story in corn, an okay demand story in beans. Cattle, what's happening with the retail side. Yeah. So in the big picture, find some value. If it's there in the marketplace, make sure we keep the floor underneath of it. If the bushels want to go higher or the cattle want to go higher, at least you've got something put together and reward rallies in the near term here. Now, I'm a little fearful that the first quarter of 25 looks like the first quarter of 24. We kind of peaked out around this window for soybeans and corn and really never found any footing again until we got to the end of February.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, how can they get in touch with you?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John Heinberg, always good to catch up with you. Thanks for joining us on Market Talk. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.